Hi, welcome to the Monday Morning Podcast. Today I talk to Brian Chu again. This time it's all about silver. If you've ever thought about a Reddit short squeeze on silver, the demand for silver from electric vehicles or solar power, it's a very interesting few minutes. I hope you enjoy it. Hey, Brian, how are you going?
I'm doing well, Lockie, and what about yourself?
Yeah, pretty good. We're back by popular demand here. We had a bit of a poll on the YouTube channel, and people wanted to hear more about precious metals. So I thought I'd get you back, Brian. Today's particular episode is all about silver. I've been doing quite a bit of a dive into silver myself, but you're the expert here. You see, silver had a big spike about a year ago. What triggered that, and what's the outlook for silver at the moment?
Well, if we look at the price of silver, it peaked in 2011 at about 48 US dollars an ounce, and then it came back down quite quickly and remained in the 15 to 22 US dollars an ounce range. And last year, we saw that silver actually dive to as low as, I think, 11 to 12 US dollars an ounce during the heights of the virus outbreak. And that, I think, was actually you could call that an anomaly. Reason being, the price of silver, it's hard to imagine it going down to below 15 US dollars an ounce, especially whilst you saw the price of gold rally from about 1,100 US dollars an ounce in 2015 to about 1,500 US dollars an ounce in mid 2019. So what happened was, I would say it's not so much that silver started taking off in last year, as much as the Federal Reserve in 2019 had to walk back on the interest rate hikes. So we saw the interest rates begin to rise at the end of 2015, when Janet Yellen raised the interest rates from 0.125% to 0.375%. Then after President Trump was elected in 2016, there was a continual interest rate rise into 2018. Now we saw we actually saw two major market corrections in February 2018 and December 2018. I thought it was a very interesting game that was being played. It was like a staring down competition between President Trump and the US Federal Reserve. Both sides knew that if you raise interest rates enough, the markets are going to crash. The idea was who was going to get the blame for it. President Trump moved ahead of the game and basically came out into public and said, I'm trying to create jobs, I'm trying to control inflation, I'm trying to make America great again. But the Federal Reserve over there, they're raising interest rates, and we know raising interest rates is going to slow down the economy. But the Federal Reserve pushed on until February 2018, when the market started correcting, and everyone thought, well, that's just a market correction, no real problem. Federal Reserve keeps raising interest rates in 2018. Then at the end of 2018, normally you would see the Santa Claus rally where the market should rise leading up to Christmas. That did not happen, especially because Jerome Powell, the new Federal Reserve chair, raised interest rates. I think at that time it would have been about 2.25%. And that was starting to reach into the danger zone. And the market actually slumped quite significantly. And President Trump came out once more and said, the market is coming down because the Federal Reserve is raising interest rates. When the interest rates go up, it actually has a negative effect on precious metals. Reason being, you have the real yield, as in the return on your US dollar, on your normal currency. They pay an interest rate, and that competes against gold and silver, which of course, we know they don't pay an interest rate. So when the real yield goes down, then gold and silver becomes more attractive and the price goes up. So in mid-2019, the Federal Reserve realized that the entire world was looking at them and going, what are they going to do? If they raise interest rates again, as they hope to do so, to try to normalize the economy, as they say, and the market actually heads downwards, they're going to have to, they're going to take the blame. So President Trump actually won that game of chicken. He called them out, and the Federal Reserve in June actually did not raise interest rates, and in July 2019, it reduced interest rates. Gold, of course, went up earlier than silver, went up to $1,400 an ounce in late May 2019, and we saw gold stocks basically just started really racing out. Silver is a slower one. Silver seems to be what you call the wild child. It's a naughty boy in the back of the room that throws airplanes during class when the teacher's teaching, and then in the exam, it's this little brat who actually scores one of the highest marks. So silver caught up in 2020, but of course, before it actually started catching up, it slumped along with most of the market because it's considered a risky asset. As we saw the market started heading downwards very sharply at the end of February to March. So silver went down to about $12 an ounce and then bounced back up monumentally to about $25, $26 an ounce within a space of 3 or 4 months. So the reason for silver catching a bid is because it's been the one that has taken so long to catch up. But as it actually makes its way, it will actually beat gold in its movements.
Well, that's very interesting because my next question was how do gold and silver interact? If you look at the long-term chart for silver, not the really long-term chart, but going back about 40 years or so, you can see some absolutely mammoth sharp spikes in the silver price. So I was hoping you could speak a bit about how gold and silver interact and what value you can place on the gold-silver ratio.
Yep. So with gold and silver, you could think of it from the perspective of its roles in the market. Gold tends to have what they call safe haven status, as in when you have economic crisis, when you have unusual events occurring, people seek safety either in the US dollar or gold. And when the US dollar appears weaker, or if there's a general global trend in inflation because of lower interest rates to almost zero interest rates, then people don't want interest-paying fiat currency because interest rates virtually zero. So they head to gold. Silver, on the other hand, has a dual role as an industrial metal and also a precious metal. So silver has its leverage of industry demand, as well as also as a monetary metal. There is a more risky component for silver than there is to gold. And as a result, gold would have, the price of gold will vary much less than it would for silver. The other thing with silver is, as I said before, because of industrial demand, it also depends on how much, how well industry is performing in terms of, you would say, in electricity, because, well, electric vehicles, so that's for one. Silver is a component in electric vehicles. It's also used in industry in terms of as a catalyst for chemical reactions. It's also used in production and also in jewelry. So if the economy performs well, silver may also perform well. But if an economy performs well, it also has a paradox that people would seek less safety and go for greater risk. and they may probably not value silver as a monetary metal. So the gold-silver ratio shows the relative value, the relative price between gold and silver. On average, it has been around 60 to 65 to 1, as in the price of gold is about 60 to 65 times the price of silver. However, in the recent year and a half, we saw the gold-silver ratio actually go up as high as over 110 to 1, whereby gold has actually moved ahead of silver much more. So the question is gold overvalued, or is silver very undervalued, or is it a bit of both? And I think it is a little bit of both in that sense. The other interesting thing that I also would point out, and I wrote this in the May Rock Stock Insider monthly report, is the amount of gold and silver, the availability of gold and silver in the Earth's crust, historically has been around 8 ounces to 16 ounces of silver for every 1 ounce of gold. Now, the question is, how can we justify a price at the moment whereby the gold and silver ratio is about 68 to 1? We're saying gold is much more scarce, or we're finding more silver. And if for my Rock Stock Insider subscribers, they know for a fact, silver mines are actually harder and harder to come by. And whilst there is silver being recycled and there's scrap silver coming in, the numbers don't really add up, and there's quite a bit of mystery going on about it.
Well, in that case, Brian, I'd like to skip ahead to my fourth question as opposed to my third, which is what about, you mentioned electric vehicles. By my understanding, electric vehicles need about twice as much silver as an internal combustion engine car. So what's the tech demand for silver from, say, solar or other applications?
So we've seen that solar panels have become more and more in demand in the recent period because of the whole green energy revolution. I have a personal bias against green energy revolution, and also I see the lack of efficiency with solar power. It doesn't work with what we call baseload energy. You can't power a city with solar panels. Now, that doesn't stop the amount of the manufacturing of solar panels simply because it is very popular from a political perspective at the moment. It scores brownie points. Whether that may change or not in the coming few years, that awaits to be seen. As for electric vehicles, there is an increase in the demand for electric vehicles, but in certain parts of the Western world, apparently electric vehicles are actually being shown to be less useful than internal combustion engine vehicles. You can think of it this way. It's okay for you to drive in an electric vehicle inside the city where you're not going to drive like 400 or 500 kilometers in one trip. So you can drive around, go home, recharge the car and it takes about an hour or so to recharge. But if you're going to travel a longer distance, like people in California, for example, can you imagine you owning an electric vehicle, you're standing there, recharging your car for an hour, and you watch 12 petrol-driven cars fill up in 5 minutes, and they're off the next trip. We're like, there is a practicality issue. Now, if there's going to be greater urbanization, more people are going to move into cities, sure, electric vehicles are going to be in greater demand. But I don't think we're going to see the end of petrol-driven cars. And until they come up with better battery charging technology, I think that electric vehicles could become a flavor of the month, and that is not the biggest factor in spurring the industrial demand for silver. I believe there'll be other uses for silver which will retain its current demand.
Okay, well, I could spend a bit of time potentially contesting some of those points, but I'm not going to do that today, Brian.
Yeah.
I'd much rather talk to you a bit about the potential for short squeeze on silver. I know some big firms over the last years got caught up in commodities trading scandals. Is the Reddit crowd onto something here, or are they completely out of touch? What's your read on the situation?
Um, I have a personal soft spot for Reddit for the Reddit crowd in terms of their squeezes. But when it comes to silver, I've got to be fair and say it's a different game trying to short squeeze silver as it is trying to short squeeze GameStop, AMC, etc. Now that being said, Wall Street bets and the Reddit crowd in leading the silver squeeze charge has actually brought up a fundamental problem with the way we price precious metals using the digital contract system. So I've talked about this in past Daily Reckoning newsletters, where the fiat currency, the bullion banks use fiat currency to control the price of gold and silver and many commodities on the exchange. So if you go and buy gold and silver in the streets, that doesn't really affect the price of the exchange traded price by much, if any, because you're actually not trading on these contracts. The contracts determine the prices. Those prices then flow through to the price in the streets. Now, your bullion dealers, your jewelers, etc., they operate on a profit margin in order to keep the lamps going and to pay their staff. So if the price of silver is very low on the exchange and there is a shortage in the physical supply of gold and silver, then they're going to have to mark up the premium that they're going to charge on top of the spot price when they sell you the gold and silver coins or gold and silver bars in the stores. So the Wall Street bets and the Reddit crowd, they are actually squeezing the physical supply of silver at the moment. And what do I mean by that is, as they try to squeeze the price of silver by buying up silver coins and bars, they're actually reducing the availability of silver coins and bars in the public. This causes the premium for coins and bars and silver jewelry to go up much more relative to the spot price. What could that do to the bullion banks as a result? Now, the bullion banks, I mean, JP Morgan has, I think, a few 100 million ounces of silver in their warehouse. They can use they could use the digital contracts to suppress the price. But eventually, the question is, how do they close off some of these positions? They actually need some of their physical stock to close off that position, because you can't really just use digital contracts forever. The other thing that could also happen is that the Reddit crowd and Wall Street bets reveal the bullion banks as the emperor with no clothes. They're playing with digital contracts and their price is completely separated from the price of those who control most of the physical silver. It won't be the Wall Street bets and the Reddit crowd who will control the price of silver. It will likely be, say China, who has been buying a lot of gold and in the past 10 years or so. So the Shanghai Gold Exchange seems to have a greater clout in determining in reflecting the real price of gold. And in the case of silver, if you look at PSLV, which is Sprott Physical Silver Holdings, they actually increased their physical silver inventory while the prices were being, while the short squeeze happened and it fizzled out. they took this opportunity to load the back of the truck with 1,000-ounce silver bars at the expense of the COMEX.
Wow. Well, that's a very in-depth explanation. I don't think many people would have been sort of exposed to that kind of in-depth explanation. So I really appreciate that, Brian. One thing I'd like to finish off the chat with is, do you recommend any silver companies to your subscribers? And yeah, if you have any final words about either your services, I'd love to hear them.
Yeah. So with my Rock Stock Insider subscribers, I had recommended to them Silver Standard or SSR mining in the May edition. And with my Hard Money Trader subscribers, I had recommended at the end of May Investigator Resources. Stay tuned, because I do have a couple more silver producing companies that I could recommend to either of my subscribers. So if you're not subscribed to either Rock Stock Insider or Hard Money Trader, I urge you to do so ASAP, especially now that the price of gold and silver could be set to rally quite strongly into the next 2 or 3 months. You really don't want to be left behind.
Well, I'm tempted to agree with you, Brian. Thank you very much for your time today. And yeah, thank you so much for coming on and doing a repeat of last week's episode. It was a lot of fun.
Yep, and I look forward to chatting a bit more with you next time. Thanks very much.
Well, that was a great chat I had with Brian Chu on silver. I thought his comments on the industrial demand for silver were quite interesting, and how that plays into the particularly sharp and steep rises that the silver price has had in the past. Now, if you'd like to learn more about Brian's services, you can find links to those in the description below. Be sure to comment, like, subscribe, and get in touch. We really enjoyed hearing back from viewers, and you will hear from us soon.